Okay, let's do this. Saturday instead of Friday. Unfortunately, the duck is out there traveling the world. Not all of us are so privileged. So he's on a bit of a break, and we tried to organize a Friday one together. It didn't work. Tried to move to Saturday, and the scheduling is certainly difficult in that remote part of the world. So I thought I would take over and talk about the absolute absence of anything interesting that's happened in crypto since we last spoke. But content is content, right? God knows what we're going to write for Technical Roundup on Tuesday. I don't know the answer to that question. Alas, the weekend is upon us. Let's have a chat. So we'll start with Bitcoin. Again, nothing's changed since we last spoke. We're still within the same monthly range as before. We had a stab through the range high, didn't work, traded to the midpoint of the range. And that's it. That's where the market is in terms of high time frame context. And we know there's all sorts of moving average stuff lined up here as well. Now, just like with any consolidation or range, the higher conviction positions are established around the extremes by definition. The midpoint is the mean of the range, and at that point, arguably, with some other factors which we'll mention in a moment, it's like 50-50 as to whether it goes to resistance or goes to support, right? Now, in this instance, you could argue that yes, the mid-range is support, but because you've had a failed breakout at the range high that took price back within the range, you're generally expecting a test of the range low, and this is some sort of interim bounce. That's completely fine as a thesis, but it doesn't change the bigger picture that the obvious quote-unquote trade at the extreme has taken place, and now if you're building high conviction positioning here, at least from the monthly, weekly ranges that matter, you're diddling in the middle, right? That's where that kind of bit of trading wisdom, if it can be called that, comes from. Don't diddle in the middle, which is to say that if the market's not at an extreme or at an inflection point or an area where invalidation is clear and risk to reward is optimized, those or positioning in those areas should be taken lightly. And this is kind of where the market's at. This is your high conviction area. This is your high conviction area. And we're at the midpoint now. And no less, is not only is the market at the midpoint, but it's the midpoint after the big liquidation spike has already played out to a large extent. So the brainless buy when everyone is a forced seller trade has already played out to a large extent, because we saw quarterlies get backwardated and, the big OI wiping candle. So even if you're going to argue to trade at the midpoint, in my opinion, the sexiest midpoint trade has already likely happened via the big flush, and then usually what follows, as we've seen over the past week, is just quite agonizing price action, to be completely honest with you. Does that make sense so far? Yeah. So that's some context. Now, is there anything to add on the weekly that hasn't been captured on the monthly? Not a whole lot, in my opinion. You could make a case that over the last week, we have had, excuse me, we've had a tentative retest of this former high here, where the market has found resistance. That's a reasonable level, not one I had on my chart per se, but, I get the case for that. Overall, until proven otherwise, I mean, the week closing above the mid-range is like a good sign, right? If we were, for example, closing through this cluster or just below the mid-range in any case, that would be kind of bad and would suggest a faster move towards the bottom of the range. But for the time being, even just by looking at candle structure, you can just see a bit of clustered price action here, right? I'm going to go very simple here. This portion was up only. Then we got some chop within here, and then this portion was up only once again, right? Typically, when you get up only portions of price, you don't get a ton of support and or resistance formed there. It's always where the volume clusters reside and where price spent more time actually trading. Those are the type of areas where you usually find your support resistance type of structures. So even if I have to, let's color code it, make it really obvious. Up only portion of the market, which isn't that interesting to us from a support resistance point of view. Then you had a month and a half or so of chop, kind of here-ish. Well, we can probably do a bit better than that. Here-ish. And then you have up only portion of the market once again. So in any case, just like by looking at the eye test, you can see, straight green candles, nothing else, straight green candles, nothing else. And it's this middle bit where you actually got some ranging, some trading, some consolidation, right? And that's sort of where the market's stuck now. You didn't build much support on a very fast move up, so that's why it was retraced so easily, and now you're landing at some sort of value area where the market's previously spent time trading. And that's all most of support resistance comes down to, right? So yeah, that's where the market's at. We know it's the monthly mid-range. We know it's the weekly consolidation before this move up. And so that's, in my view, what's explaining or what's behind a lot of this churny type of price action. We've studied previously by looking at OI, what normally happens after you get a big open interest, liquidation-driven flush, whatever you want to call it. And the answer is nothing special, right? Typically, and I'll just bring this up very quickly in case you weren't there for the last video. What's up with the title? What is up with the title? So if we go to Coinalyze here, we go on the daily, get the good old open interest for coin and stablecoin margin. You can just generally see, like here, you have the big OI flush and the market traded lower, then chopped, and then went lower, right? You've got another one here, market formed a bottom and then just went sideways for months, eventually poked around the low on some exchanges. I know FTX poked close to here, and then you got your reversal. On this big open interest flush, market flushed, went sideways for, 10 days or so before spiking the low once again, before eventually trading higher. So in any case, from, it's not a massive sample size by any means, but certainly enough to take seriously in crypto. When you get big open interest type of flush candles, you either get sideways or the market poking close to, if not around, where the OI low was made, right? We saw it here. This was the low made, market traded through it, choppy bounce, whatever, went lower. Here on FTX, it traded close to the low, but just generally the price action that followed this OI flush was just weeks of sideways, which wasn't very fun. On this occasion, spiked below the low before reversing, and the most recent one now, in relative terms, not even that much time has passed. So that's worth bearing in mind. I know the chop feels agonizing, but relative to the time that the market usually takes to kind of process these events, it hasn't been that long. And what we've had so far is, unlike in all these previous examples, the market hasn't really backfilled much of this wick. Now, does it have to? Not necessarily, right? It can just range without retesting the extreme of the move. But as we've seen generally, it likes to come close. So, during the course of next week, for example, if the market continues to show weakness, I wouldn't be surprised to see a move in the sort of 43, 44 range to give a poke at the OI flushing low, right? Jimmy Jude's got this nice quote where he says, if it prints there, it'll trade there. Happens a lot in crypto. Again, same thing here, right? Big wick, awful price action, and then eventually trades through or close to the low itself. Close to the low itself, if not just completely chopping. In this case, traded through the low itself. In this case, traded through the low itself. Yada yada. So even if you're the biggest bull, I personally wouldn't be comfortable just getting long like right here, for example. And the reason for that is, even if my idea that this is kind of close to the bottom or looks like a reversal is correct, like if that's your thesis and you're acting on that, it's still not a comfortable trade idea, because even if your idea is right, the chance that you get stopped out is still pretty high, given how much the market likes to trade back to the extremes of these outlier moves. So it's one of those tricky ones where even if you're a bull, it's a tricky long because of what's underneath you, And we also have, again, for the nth time, a lot of evidence to believe that the market just tends to suck and move sideways after these events, or if it pops into resistance. So, I'm not piling in to buy this thing, especially given the quick liquidation bounce trade is over. Okay, that's my take on BTC. TLDR, same as before. Chop and generally non-V reversey price action until proven otherwise, with a decently higher probability of stabbing towards the lower kind of quarter of this wick, around 43, 44, perhaps. In terms of levels, I mean, kind of like we spoke last week, it poked slightly higher than I thought, but ultimately it got stuck around the 50k handle. You can see it tried to break it, no acceptance, didn't even reach previous support before trading lower. So I think that's more or less going to be, around 50k-ish support is still sticky, and then anything towards the lower quarter of this wick for downside range. So range high, 50-ish, range low / support, 44-ish. And this is my expectation until proven otherwise. You can see the market tried to break from balance. It didn't stick. And it's just not the type of environment that lends itself well to trending setups. As per last week, one thing that's unchanged in terms of my views, if the market chooses to rally into this prior area, the pre-breakdown support, especially if it does so very quickly early in the week, I'd expect that to also end up a bit like this breakout attempt, i.e. mean revert back into the range that we pointed out. So I'm not looking for any breakout trades, not looking for any trending setups, keeping it very short term, if at all. I do wish I were on holiday with good old Don, but alas, I am not. Above us, 50k-ish, expecting that resistance until proven otherwise, and I'm not chasing breakouts through it. Support, 43, 44-ish by virtue of trading close to and sort of backfilling or refilling the wick that was put in. That's it for BTC, unfortunately. Does that make sense so far? I mean, I didn't have much fun making the same argument last week that, hey, you get a big spike, the price action's going to suck, but we got a big spike and the price action has sucked. And until it unsucks, I'm just, my view will remain the same, unfortunately. I think mentally you have to realize that when you miss volatility, like if you're on the wrong side of a volatile move or you missed it or whatever else, your mind craves it. So as soon as you see a green candle, because you have this FOMO and this precondition of looking for volatility because you missed the most recent version of it, you're going to look for every breakout and look for every momentum play, etc., etc. But sometimes, life isn't so nice. If you miss the big outlier liquidation move, a lot of the time you're going to have to wait a fair bit before momentum and or breakout setups become apparent. I mean, because we're going to talk about Solana. Curious why title of the stream mentions Solana, because we're going to talk about it. I didn't realize that was so controversial. Alas, let's move on. ETH is still interesting. My patience for this 4K range high doing its job is running increasingly thin. Looks like, again, depends how tomorrow goes, obviously, but it needs to hold on a weekly basis, no doubt. Otherwise, this turns into a failed breakout, and no one wants that. As for the daily time frame, it technically did break market structure, right? I know there's good reasons to focus on the 4K level, but if we're looking at very recent market structure, just taking these lows, for example, we closed through them, right? So that's a daily break in market structure, but because it's taking place around this 4K high time frame level, there are other factors to consider, right? What I don't want to see is for during the course of today or tomorrow or whatever, early Monday, this 4K level to get stuffed. So ideally, if we're going to expect some sort of consolidation or non-nuke price action in ETH, what needs to happen is the weekly time frame holds on a weekly basis, and then this daily close below turns into a reclaim type of setup, right? Where you've got weekly support, close below, close above, this ends up being your failed... Let me make this slightly less thick. So we know this is a weekly level. You have a daily close below on the weekend, which then closes above, and then either rallies into Monday or pulls back and finds support without violating the failed breakdown low. All of that is cool. I still think it would be a bit range bound until proven otherwise. This price action is again not the right environment to be hunting trend following setups, in my opinion. I think on stream we talked about this cluster being the range high, something like that. That didn't age terribly. I think Technical Roundup, the newsletter, is a bit more conservative and uses this. In any case, it's like a reasonable range high nonetheless. But I'm just starting to see some, cracks emerging by virtue of, the weekly time frame hasn't been able to send this thing any higher than the intraday or lower time frame range high. And we've had our first daily close below it since it turned to support. So ideally, if this isn't going to be a piece of shit, you get a reclaim, like a strong close above it, and then ultimately 4K goes back to being support. But I really do think this is the last chance for it to do so. Because as you know, failed breakdown setups usually don't happen kind of back to back. Whereas, as in, you've got support, failed breakdown, reclaim. If it gets back above, you normally expect it to just reverse and re-enter the range, whatever. Cases where you have a level of support, support, breakdown, comes back above, and then breaks down again, this is usually bad, and that leads to continuation, right? So you can't, it's very unlikely that the market double, offers you 2 failed breakdowns. At that point, that's just a breakdown, right? So if we extrapolate that to the current ETH chart, very clear signs of support at 4K. We've now had a close below here, which also technically is a break in daily market structure as well, none of which is particularly good. So if that's going to be remedied, it has to close back above 4K and not trade below it. If it does, even if it closes back above and then loses it one more time, the probability of this being some sort of trap to the upside is low, and it would just look like it's going to roll over at that point, I think towards 3K. I'm personally not rebuying this level. I think you can make a reasonable case for it, if the daily closes back above it, or you see some buying at 4K on Monday. I think all of those setups are totally fair and reasonable. I just don't like it in its current form. So maybe I'll change my view on Monday, where the weekly closes above and you've got a bid, as I said. But in the short term, daily market structure break, and kind of, even the risk reward isn't there right now. So it needs to either prove to me that it's a very clear failed breakdown setup that's going to be defended back at the level itself, or I'm really not interested. And again, even if you were very bravely buying 4K on every occasion, it hasn't really yielded much aside from taking you to the top of the daily range. And those are kind of 3-4% moves, right? The cluster that we use from the stream, what is that? I was wrong. Now, it's like an 8-10% move. I think it's actually much more reasonable than I thought for on a scalping basis. So I was wrong there. I take that back. But structurally, if it doesn't want to form the type of reclaim that I like, I'm getting increasingly impatient with punting this thing. Yeah. So you can kind of see it visualized best on the intraday timeframes, right? Like very clear support, pokes below, support again. If it loses that for a second time, this should have been enough. If it loses it for a second time, it's probably cooked. This is just about acceptable because, again, this is a weekly level. So judging it on every single 4-hour close is going to give you a lot of kind of messy signals. But generally speaking, I think 4K has been given plenty of time to do its job as support. The best case scenario would just be again, a final quick wick here before shooting off on Monday. Especially daily closes back below 4K, I think the bullish retest case really starts to look far-fetched. Now, on to Solana, which I want to bring up. We spoke during the last stream about this 194 inflection point. That's been broken, so I'm not terribly interested in knife catching this breakdown. It's a break in market structure. It's the loss of a key level, similar to, I mean, it looks worse than ETH, right? If it wants to come back and do a sort of the good old crypto Twitter influencer reclaim type of trade, or just close above, consolidate, and then push up, whatever, moving back above 190s in any case would be cool. But for the time being, you had a really clear level, support, 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 whatever, and now that's been broken down. So if this is like a, weekend scam price action, whatever that means, and it wants to move back above, maybe there's a long there, but structurally I'm cautious because you've just lost the key level, and I don't want a knife catch in the middle of nowhere, right? To add some further context to that, the weekly close is going to be important because you have the range high at 174-ish, and then the range low at 135-ish. So if the weekly close loses the top of this range, highest close, resistance, resistance, breakout, acted as support. If this ends up being, again, I mean, similar to Bitcoin to some extent, a failed breakout, or a break, I should say, given how far it went, a break back within the range, then this ends up being your excess, and your target is that the market moved back within the range high, and you're looking for the range low. So in any case, if the weekly closes below this cluster, below this level, below the 170s, my weekly bias will be towards 135, so I definitely wouldn't be interested in knife catching, whatever, daily, 4-hour type of stuff. I do think if you get a very fast and outsized move into and below the 130s, like a deep wick type of territory into this fresh range low, there's, depending on how the rest of the market looks like, there's probably some sort of punt to be had there, simply because, as you know, the bottom of the range offers best risk reward typically, especially if it's like a very fast outsized move, something that looks like it should be a wick, whatever. There's probably a trade there from the range low to either the midpoint or the range high, but for the time being, on the daily time frame, point number one, on the daily time frame, 194 has been lost, and point number two, on the weekly time frame, it may set up to be such that the weekly support is lost as well, which means I'm either looking for reclaims of previous value areas or punting at extremes where risk to reward is optimized. Because as we know, if we treat this as just like any other range, range high, range low type of thing, and the market does this, breaks from value, does whatever, and then falls back within the range, you've seen this a million times. You normally target the mid-range tentatively and the range low definitively as your target. So if, let's say, the candle closes like this, excuse the hideous drawing, right? I think I can do slightly better than that. Let me try. Okay, there we go. That's not terrible. Let's say the candle closes like this. This close would be this, right? And then your long options, as I said, are either at the extreme or on the reclaim of the range high. But in the short term, 194 lost, bad. Weekly close potentially not being great means that other trades or trades not here are the ones that are attractive. Does that make sense? Okay, good. AVAX, another one, the layer 1 darling. We kind of talked about its, how it's not the same coin, really, after breaking support at 100. I still think there are two trades that are interesting for AVAX. Either the reclaim of this pre-breakdown cluster would be cool, or, for me at least, the weekly time frame missed support. So I know some colleagues were well positioned on this dip here, but for me, it didn't actually reach any type of structure. For me, the earliest I get high time frame structure is whatever, this range before it really went parabolic, between 60 and 70. If I get something very discounted, oversold, liquidation driven into the 60s, similar to Sol, it doesn't mean it has to be the bottom, but there's probably a bounce trade to be had there. Depending on how the rest of the market looks like, etc., etc. But for the time being, this didn't really land anywhere that's technically relevant for me, so I'm not touching it for the time being. And again, as we discussed, it looks like, however you want to define the parabolic or the final leg of this market, market structure kind of broke, and you just got to be aware of trading in the middle. And by middle, I mean when you get a break in mid-term trend and you're away from high time frame support. That tends to be a not so attractive area to trade, because the higher time frames are kind of pointed against you, but you still don't have like a value area to anchor a trade on. And so this is technically in the middle of nowhere, because the shorter time frame trend is broken, but the higher time frame supports haven't been reached yet. So it's a bit of a hellhole to trade, at least in my opinion, or on higher time frames. Yeah, log, not log, doesn't matter. I mean, I use horizontal stuff, so I kind of just flick between the two so my eyes don't get tired. It's not that deep. I don't think the yearly candle is important for January, no. I don't really... I'll sometimes peak at the quarterly, but I really think monthly and weekly for crypto strikes a good balance between, giving high time frame context, but also being actionable or giving you a bias to some extent. Yeah, I mean, I haven't tweeted for a week because they're really, I'm not good at being entertaining on Twitter. I don't have like a lot of useful things to say. A week ago, my basic premise was these liquidation-driven moves lead to chop, and that chop kind of sucks to trade. And that's essentially what we've had. You've had the liquidation-driven move, chop since then that's not been great to trade on the majors. Above us, there's a kind of same old 50k-ish area. Below us, there's still an unfilled wick, and this is where you lose your money in between high conviction positioning, in my opinion. ETH has been slightly more doable and tradable in terms of the rotations. I just think the picture is slightly more murky now that we've had a close below 4K. If it finds resistance there, that starts to look like a really ugly chart. So I think the free money longs at 4K are slightly less clear than they were previously, and I'm just not enticed by those conditions. Especially if I'm not attracted to Bitcoin. I'm going to be very conservative in ETH, in holding ETH longs. And now I've got a bit of a, slight red flag with this daily break in market structure, so I'm not going to try to force any trades personally there, although I think as a range trader, there's still probably enough to feed your family there somewhere. On the altcoin front, a lot of these lost support and broke high time frame structure. So AVAX, and hasn't really hit or come back to its weekly base here yet, between 57 and 70-ish. So there's nothing for me to do here. And Solana, in a similar vein, I think you could have made a reasonable case above 194, this big breakout level, but now that's been lost as well. So again, just these kind of small cracks coming through that make me not want to punt this stuff, especially if Bitcoin is not a guarantee and doesn't look strong, right? So in terms of stuff on my radar, just to kind of summarize very quickly, BTC, post OI nuke chop, still 50, 51-ish range high, bottom of wick range low, right? By bottom of wick, I mean I should just say the wick range low. Liquidation wick range low, which is what, 44 to 46? 44-ish? Okay. Chop, unattractive. ETH, 4K weekly has to hold. Already sorta meh, because daily closed below sup. Maybe early week reclaim type of setup. 4K to... What's the range high on ETH? What is that? Yeah, 4.5. We're not really dealing with massive moves here, are we? Where are you? To 4.5k-ish. Solana, below 194 support, meh. First breakdown, so careful. And then, where's the Solana range high again? Below 173, likely into 130s. Weekly below 174, likely 130s. AVAX below daily trend support at 100-ish, high time frame value area between 60, 70-ish, currently neither here nor there, so meh. Overall, BTC chop post lick, some scalps available on ETH alts maybe, but overall defensive, not rushing anywhere. Backfill on BTC wick, some cause for discomfort. Okay. I'll leave a like on these videos, by the way, if you enjoy the summaries, but this is kind of my best attempt at it. And this will probably be a shorter video as well, because not much in news, the duck isn't here, and the market really hasn't changed. So I'm not going to insult your intelligence by making you overstay and waste your time here. So Bitcoin, post-OI nuke chop, still kind of how we spoke last stream, how after these open interest purges take place, V reversals are not typical. In fact, they're the least likely outcome, and instead the market tends to chop, if not poke, at the low that was made at all those liquidations, kind of backfill the wick. The levels are the same, 50, 51-ish, range high as before, and then the range low, or the support, is, as discussed, the kind of wick that we had, which falls at a, low to mid 40s. The chop to me is unattractive, generally speaking. For ETH, I think everyone's looking at the same thing quite literally, and there's nothing else to look at, the 4K level. I think it's already lost some of its appeal to me, at least, because it's closed below it. Obviously, if it closed below and looks like shit, a setup that looks like shit can start to look really strong if it fails to continue, right? Or gives you cause for reversal. So maybe it closed below 4K and you get some sort of springy reclaim. There's a trade to be had there early in the week with equities open and, the non-weekend crew being out to trade it. So maybe that's available, but even then it would be more or less on a short time frame basis from 4K to 4.5K-ish. And if the weekly closes below 4K, then any, the long scenario is off the table, at least for me. In terms of alts, I've been following kind of the layer 1 proxy trades. Solana lost daily support at 194. That's the first time it's done so in a while. So that's a shift in character that's not particularly pleasant, which gives, again, some cause for concern. In terms of the weekly range, it's trading around. If it closes back below 174, that would mean it's kind of been accepted back within the range high, which typically means you gone towards the range low, this being the deviation. And in Solana terms, weekly below 174 probably means 130s unless the 174 gets reclaimed, right? So again, just kind of eyeballing these two bullet points, not terribly attractive because loss of daily support and the weekly time frame is a toss-up at best, right? AVAX, similar. Daily trend is dead, or at least broken, right, to the downside. So when daily trend breaks, you usually look for a higher time frame value area to punt, or just a higher time frame support. And for me, that higher time frame support hasn't been reached, and it's that consolidation between 60 and 70 that's attractive on a relative basis, and the market's currently neither here nor there. So you have a daily breakdown, but without reaching weekly support, so it's kind of meh, this isn't an area where I'm going to build any high conviction positioning. So overall, unfortunately, guys, another boring one, I'm just honest with you, that's just go get a hobby, do something else, at least for me. Why? Because Bitcoin is still in its post-liquidation chop mode. Some scalps are probably available, like we saw on ETH and alts. I miscalculated how big the actual ETH rotations are, so maybe there's something there, but nothing that I'm chasing personally. Overall, defensive and not rushing anywhere, given how Bitcoin looks and ETH looks which is range-bound at best for the time being. And one of the things that contributes to that is the fact that we had this big wick on Bitcoin and it hasn't been backfilled yet. So even if that was the bottom, the chances that the market trades and fills in some of that extreme price action, the probability of that taking place, from what we know, is quite high, given it's happened virtually every single time. So just starting to get long things while having that wick below us with a high probability of it being backfilled just isn't like a comfortable trade setup, because it means even if your idea is right, the chances that you get stopped out pretty high as well. So meh, guys, meh. That's all I've got. I'm going to delete this or get rid of this in like a few seconds, so let me know. Screenshot it or tell me I'm an idiot, whatever. Any questions for the time being? Yeah, go do some Christmas shopping for your family. Do some volunteering. Do whatever. There are better things to do, I think, at the moment. Cool, guys. That's all from me. It's a bit of a short one, but there's another one coming up on Monday. I don't know if that'll be a stream or a space. It might be a space, because if the market's dead, I can't do this again. Not going to give you the same content for like a third time in a row. Of course, thank you to our friends at FTX app, formerly Blockfolio, for supporting us. Maybe get your family members some discounted shitcoins for Christmas. That's a decent present. If the market goes up, that is. If it goes down, then I'm sure that raises questions about your integrity and trading abilities. But hey, might as well take a gamble, right? Maybe it's a Christmas miracle that all of our bags will just go up and we'll pretend the red candles never happened. That's all from me, guys. I'm not going to extend this further than I have to. Post-liquidation chop, survive, be picky with your capital, and let's wait out some higher conviction and higher probability setups instead of forcing trades. That's my insight. That's all I've got. I'm sure Duck will give you updates and Monday content, Tuesday newsletter, lots of stuff to look forward to after the weekend. Thanks for being here. Take care and speak soon.